Hey, North Texas, it's Kyle Mason. I'm sure you've heard by now that President Trump dropped an absolute bombshell on truth. I'm going to repeat a little bit of it. I'm immediately taking steps to ban larger institutional investors from buying more single family homes. He's pushing for apparently a 10-year phase out from these buyers on Wall Street, think hedge funds and large equity firms, and having them sell off over time. Now, this could shake up the housing market big time in some areas. Today, we're going to take a deep dive into the numbers, how many homes they actually own, when have they bought these homes, how long do they hold them, and are they only buying pre-owned homes or are they building new ones? And most importantly, what is the impact nationally, but also right here in Dallas? Let's break it down point by point with local ties for us in DFW. First, who are these guys? Institutional investors are massive entities owning thousands or more homes, turn them into rentals. The nation's largest landlords are Invitation Homes, Progressive Residential, American Homes for Rent, and FirstKey Homes. Now, nationally, they own about 1 to 2% of America's roughly 86 million single-family homes. That's, depending on the numbers that you're looking at, is roughly 450 to 570,000 properties. Now, keep in mind, this is a fairly new phenomenon. In 2011, no one company owned over 1,000 homes. Now, this was achieved from private equity by buying large portfolios from Fannie Mae and Freddie Mac or at auctions after the 2008 crash. Now, for us in Dallas, these players love our stable suburbs. We always have people moving in. For example, Progress Residential owns roughly 6,200 in DFW. Now, DFW ranks 5th in the nation for new rental home builds, with roughly 84 units coming in 2025, 2026. Now, institutionally, I know you've probably heard of Blackstone targeting spots in North Dallas. Now, real quick before we move on, I've been seeing this go around. There's Blackstone, and then there's BlackRock. Now, these companies aren't related anymore. They were in the past. However, they have separated and parted ways. BlackRock is more focused on ETFs, investment funds, index funds, kind of your traditional Wall Street type activities. Blackstone is more of a private equity firm focusing on real estate, credit lending, and more like hedge fund activities of that nature. An article from umove.com has a list of 50 build-to-rent neighborhoods around DFW that hedge funds and private equities are building. And I mean all over DFW. So all the way up from Salina to Waxahachie and Garland to West Fort Worth. So it is all over DFW, and it's not necessarily happening in one hyper-local spot. Now, let's ponder this question just for a second. Is it going to make homes more affordable? Because the original argument here is that these equity firms are making housing prices less affordable for people. Is it going to make homes more affordable if private equity funds and hedge funds are actually building new neighborhoods and building them to rent? Now, how long they actually hold these? I mean, the hold time could be 5 to 10 years, but eventually these homes are going to be sold off to the public. But as of right now, they're building them strictly to rent them. Is that making housing more affordable or less affordable? Let me know what you think. I have some thoughts on it, but I'd like to know what everyone else thinks. Go ahead and let me know in the comments. All right, let's get into the raw numbers. In the U.S., large institutions, again, own about 2% of all the single-family homes. But in the first part of 2025, overall investors bought about 30% of the homes. Now, that is up from 27% the year before. But why the increase? Well, some are suggesting that because it has been a softer market and they haven't necessarily let up, now they're representing a larger share of that market. Now, also, investors are seeing opportunities for price negotiations, seller concessions at closing, turnkey type properties that need little out-of-pocket expenses, and by far less multi-offer situations. Now, zooming into Dallas, investors' purchases hit a 32% of sales here last year. So 32% of all the sales went to some type of LLC with institution holding thousands. The argument is that that squeezes our inventory. Now, DFW, over the consecutive months and quarters, has now risen up to a roughly 1.5 month supply of homes available. So this number continuously increases. If you remember back in 2021 or roughly 2022, that number was extremely low and you had multi-offer situations all the time. The trend continues to move forward, and people do consider a 6-month inventory to be a balanced market, and they do believe we are headed that direction. So let's look at the disconnect here. How is it that the large institutions own roughly 1 to 2% of homes, but Dallas investors hit 32% the sales last year? Where's the disconnect? Here's why. While large institutional investors continue to get most of the headlines in the single family space, small investors account for more than 90% of that investment market. These are individuals owning 10 or less properties. That's right. Most of the investment properties being purchased are by smaller operations, most owning 10 or less units. Let's also not forget the situation that drives up numbers owned by investors, or how people come up with this data is pulling tax rolls and seeing an LLC. That is the accidental landlord. Go ahead and search accidental landlord. You will be pushed a massive amount of books teaching people that never intended to be a landlord on how to do it. Why is that? Because it happens a lot. The actual volume, approximately 3 million homeowners are estimated to have become accidental landlords as late as 2025. The transition from seller to landlord has surged. In 2025, increases in failed sellers turning to rentals. Okay, if you've been on the MLS, if you're in real estate, you've been looking at properties to buy, you will notice that a lot of the homes that are for sale are also for rent. The sellers are trying to do something with their property because they need to get going down the road for one reason or another. Dallas saw this almost a 32% jump. Approximately 42% of all U.S. landlords and owner-operated only own one unit. Again, let me say that again. Approximately all U.S. landlords 42% of them only own one unit. That is not mainly people going out thinking they're going to be landlords and build a portfolio. This accidentally happened to them. This is because someone bought a home and then had to move very quickly because of a job transfer. They don't feel like now is a good time to sell. So instead of selling it, they just go immediately to try to lease it. Perhaps they're hoping to return to the area. Or what a lot of homeowners have experiences right now with is that they purchased in the last 5 years and they can't cash out of the home because there isn't enough equity. Look, I could go on and on about the data, and I'll be making more videos in the near future. Make sure to share and subscribe to keep up with that. But the big question here is what is the impact if this ban actually happens? I mean, nationally, depending on which data set you're using, it could free up roughly 450,000 homes over a decade as large investors begin to sell off their holdings to end their buy and hold cycle. Now, this could add roughly 1 to 2% supply and maybe dropping prices slightly, but this would greatly depend on the actual hold cycle and if they're required for some reason and somehow to sell on a shorter time frame, or if at all. Now in DFW, the data set, this could be roughly 20K to 45K homes over a given time frame. And you're thinking that's a huge range. Well, it's very difficult to exact all the LLCs and roll them up into their parent companies and who actually owns what. The funds are constantly moving around ownerships for one reason or another, and funds sell to other funds as well. So again, and just to go back to the beginning, what is a large institutional investor? Some people say if you own 100 or more. Some people say if you own 500 or 1,000 or more. Mainly this data that I presented is companies that own over 1,000 homes. And I think that makes it much easier But again, that's only a few companies, and the amount of companies does increase as you kind of drop that bar. And it all depends on the language, if there is any in the future, on what the requirements are actually going to be. And I'm actually going to make a video of why the language of any bill coming forward is going to be so important, because ultimately, where there's a will, there's a way. And if people want to continue to do this, especially large institutions that have the money to figure out workarounds, the paperwork, the lawyering, etc., they're going to be able to. Now, if you're in real estate, you know that there isn't going to be a one problem fix solves it all. Whatever solves it all means. That means a lot of different things to a lot of different people. Now, there are many issues that feed into the disconnect between incomes and the cost of housing. This could be just one of many small steps that could be taken to get the average age of home buyers lower. We've seen that drastically increase over the past couple of years. Increase the number of first-time home buyers, and start to reignite that generational wealth cycle that our forefathers had built for us, and they're trying to leave to us. Now, in conclusion, Trump's ban brings spotlight on investors as housing villains, but the numbers show they're just a small piece nationally. Though they do hit here harder, like in Dallas and parts of Florida, because obviously our economy is more stable. And so it's a safer place to invest, and the returns have been much better. This could open up the door for some North Texas families, but unfortunately won't, in my opinion, solve everything without just simply building more. What do you think? Is this a game changer, or is this just talk? Drop your comments below, like the video if this helps, and subscribe for more DFW real estate breakdown. Thanks for watching.